What's up, everybody? We're back with another episode of Bullish Chips, where we use a proven and repeatable strategy to make money every day. This channel happens to focus on the Bullish Semiconductor ETF, which goes by the ticker symbol SOXL, but the charting and the trading method that we use can be implemented to trade any company that is out there on the U.S. stock market. The nightly and weekend videos like tonight identify triggers and targets for trades ranging from intraday scalps and short day trades to long-term swings and leap trades. So if you want a deeper dive into exactly how we set up our charts, make sure to check out the bonus content on our YouTube page. And for more information about the strat, which is the base of our charting method, you can find some more free information in the description of this video. Now, make sure you hit the like button if you enjoyed this video, and if you enjoyed this channel. Really helps us grow and help spread this information to other folks to hopefully help make trading easier for them. And if you haven't already, hit the subscribe button and the notification bell as well. That way you're notified when we release our bonus content, content other than these nightly and weekend videos we release time to time. So make sure you have those buttons clicked. So I encourage you to hang with us through the whole video today and follow along, because along with the triggers and targets that we identify, we do give some good insight into the price action on all time frames from the day all the way up through the year chart. So go ahead and hang with us, and I'm sure you'll pick up a few things. So with that, let's go ahead and look at the agenda for today. We're going to go ahead and recap the price action for Friday, October 7th. Then we will zoom out like we always do, take a look at the week, month, quarter, and year now that we're a week into this new month. Then we will take a look at the market maker's expected move for the week of October 14th. And then finally, we'll zoom back in to set our 4-hour markers and the triggers and targets for Monday, October 10th. We'll look at the triggers and targets for the week of October 14th as well. And then we'll do a quick review of the triggers and targets for the month, quarter, and year. All right. So looking at the charts today, intraday price action, looking at it from more of a scalping perspective first, like we normally do. If you're not familiar with this channel, we have what we call our 4-hour markers, which are up here at the top of the chart, previous high of day. Then we've got the overnight high a little bit lower. A little bit lower than that is the previous low of day, and below that is the overnight low. The other 4-hour marker that we bring into view here is the opening print, but we're not able to actually put that on the chart until until the trading starts for the day, right? So the night before, you go ahead and chart out your previous high of day, overnight high, previous low of day, and overnight low. And once price opens, the following day, this opening print, what we call opening print, we want to look for one of two things, right? If we push up, we want to look for higher lows at or above opening print. And if we push down, we want to look for lower highs at or below opening print. All right. So today you can see how we got a very nice lower high at or just below, or I'll call it at opening print. And we went ahead and entered into puts. Now we were able to get the lower high following a higher low. So we were a little bit, cautious here at this point that we may need to go ahead and stop out if price went back above that previous lower high. But we did get the lower high, another lower high below opening print, and in fact below the overnight low as well. They were basically the same level, and we got that further push down. We pushed through that 78.6 fib of the bull flag from the April low that we talked about yesterday. And now we're back into the range of October, right? So these fibs here, this 38.2, this 50, and this 61.8, those are the Fibonacci levels from October's trading range. So you can see how we pushed all the way back down to this 38.2 fib, got a little poke below, but then started to find ourselves and put in a higher low. And at this point, we're pretty stretched to the downside, right? We pushed today all morning. We pushed all day yesterday. Things are a little oversold at that point, right? So from a pure risk to reward standpoint, you could look here, this could be a nice entry for a possible long. Now, it doesn't mean we're going to hold it for 5, 6, 7 days long, that type of long, but a call, or we're looking at price going back up. And we are technically in a downtrend on the 1 hour and the 4 hour chart. So really just looking for a push back up to where that, downtrend line may be. That downtrend line is we would give it more weight, especially if it's crossing over a horizontal level, a major horizontal level as well. So we went ahead and took the risk and entered into calls with this higher low here. As soon as we got above the high of this higher low that candle, then we entered into calls, and we were able to hold them through the end of the day. Now we unloaded a majority of the position at the end of the day, did keep a couple to swing into next week, but we're, like I said, still in a downtrend from the 1 hour and the 4 hour perspective. So in fact, we haven't even really locked in the lower low on the 4 hour, right? So actually, let's just take a look at the 1 hour chart first here. Let's get us a good chart to look at, and we can see on the 1 hour, we've got a high, a lower high, a lower high, and in the same sequence, a low, a lower low, and a lower low. So that's a downtrend. Lower high, lower low, lower high, lower low, lower high, lower low. So now we're getting this push up, and let's just go ahead and draw in an not imaginary, but draw in a downtrend line. And you can see we met some resistance here, and we're able to push through. Now we're running back into last month's 50% level, not from the top side, but from the bottom side. So approaching it as resistance. We'll have last week's 50% line that will act as resistance as well as last year's 50% line that will act as resistance as well, because we fell through all of those levels this week. But we do have, at least this push up, and we don't want to get too far ahead of ourselves, because, Monday, if we push back down, that's just locking in a lower high. Same with the 4 hour perspective. Oops. Let's go to the 4 hour chart. Right. We got a lower high, lower low, lower high, lower low, downtrend, right? We got this push up. Yes, it triggered the 1, 2 down, 2 up. So we could see this push all the way back up to the 46.79 level, which is, once again, last year's 50%, and which also coincides with this daily downtrend line. So yes, we've got room to push up. The risk to reward was there for us. We're glad we took it. We kept some swings over the weekend to see what next week does, but we don't want to get too far ahead of ourselves. If we can't fully defeat that 1 hour downtrend line, let's go back to the 1 hour chart, right? If we can't get a higher low above this downtrend line, and we get, some pushback down and then a lower high, we're still down in that hour downtrend. Again, the 4 hour, even more room to stay in a downtrend, right? Because we haven't even locked in the lower low yet. So when I talk about not locking in the lower low yet, let's go back to the 4 hour, right? We've gone lower. Oh, actually, we did. I apologize. I forgot. We triggered that 1, 2 down, 2 up. So yeah, we locked this in as a lower low. So it's a good thing. It took till the end of the day. I forgot that it did finally trigger at the end of the day. I was just worried that it wouldn't, or I'm not say worried, but I was cautious that it wouldn't. But we did lock this in as a lower low. So we do have the opportunity to this could be the higher low, right? If we get pushed down over the weekend, pre-market on Monday, and go 2 down in the first 4 hour candle of Monday, that's just locked that in as a lower high. So, again, the risk to reward was there for the short-term play in the long position, but we don't want to overstay our welcome. Looking at it from the day perspective, same type of thing. Yes, it was a green 3, but it was a lower low in this sequence of lower high, lower low, lower high, lower low. So we're still definitely in downtrend, and all we've got is room to put in a lower high. So if we can get past this 46.79 level, all right, we're looking good. At that point, I would think that we would probably at least make an equal high in that case. Depending on how much momentum we get pushing through there next week, if we do, right? I'm not saying that that's going to happen, but if we do get a push up there, then I think this could, just be another example of expanding the broadening formation, which we talked about over this past week, the week of November 7th. We talked about how this was a lower low, and this was a higher high, creating the broadening formation, and then getting this lower low here just widens that broadening formation to the downside, and really hasn't even widened it. It's still within that broadening formation. So got to look at things still from at best a neutral position if we're talking about short term. Let's go ahead and zoom out a little bit more. Let's look at the week. Here we go. If we look at the week, we can see we got a pretty nasty 2 down, right? But if we're looking at it from the strat perspective, that's what we were looking for. 2 up, 2 down. It really didn't even reach its magnitude. And if we reach that magnitude from the week perspective, we're looking at a 1 combo 2 up, combo 2 down, which is basically the reverse of the strat that we're in on the quarter, right? On the quarter, we're in a 1 combo 2 down, combo 2 up. This would be a 1 combo 2 up, combo 2 down, and we're looking at more downside action, triggering because the magnitude for that move is the quarter flip with 34.17 or the low of the candle to the left of the 1. But by that point, you've got some momentum and you're past the 61.8 fib of this bull flag that we've got from. Oops, let me make this bigger so people can see it. That we've got from July, right? So here was your flag pull. Here was your flag, and we've got our fib extensions in here. We got them dim, so they're not taking up too much space on real estate on the screen. But if we hover over them, they brighten up a little bit more, and you can see that if we get past that 35.69 level right here, right, that's the 61.8 fib. We're looking at going back to the 50 probably, right? And if we get a bounce there, that would still remain bullish from a long-term perspective, but at that point, we've got a gap down below that's pretty close, not the biggest gap, but then just below that is another gap, and we've got the year flip. So we keep going down, we flip the year red. All of a sudden, we went from full time frame continuity to the upside, where the week, month, quarter, and year were green, to now we're full time frame continuity to the downside, where the week, month, quarter, and year are actually red, and the bears have control again. So again, I'm not calling for that. We're not breaking down from the week and up, right? This is a expected move. Once we triggered to the downside on the week, early on in the week, we were calling. We have the triggers and targets every day that we looked at them. That target was 35.97. So this shouldn't be a big shock to anybody who's familiar with the channel. All right. And again, we're not breaking down. We've still got plenty of room. We can come all the way down to 23.50 to set a higher low on the week perspective. Same thing from the month. Not as bad. Now it's turning a little bit more on the month because we were that inside candle, right? If we take a look, let's get these broadening formations off of there. If we take a look here, we had the 2 up last month, and then this month we opened up inside upper third of that candle. But now we've not only gone to the 50% level of that candle, but we actually pierced. And I mean, we're almost 2 down. We almost went 2 down on the month already, right? So 3-4 more weeks left in the month. Still an easy possibility of us going 2 down. Again, even if that happens on the month perspective, it's not the end of the world. We have made a higher high after a soft higher low in the sequence of higher highs, and all we've got is room to put in a higher low, right? Again, 23.50 is kind of the level where if we're, as long as we're above that and then we're able to reverse back up, all we've done is put in a higher low. All right. So I know it's been kind of a red week overall, but we needed it, really, frankly. And we had triggers and targets to the upside and downside, so you should have been able to capitalize on that downside action, right? Now, from the quarter perspective, getting a little bit wary of where we're at, right? Because we did trigger that. Oh, come on, Thinkorswim, hold still for me. We triggered that 1 combo 2 down, combo 2 up, right? As long as we were above 36.15, we were looking for the magnitude of 70.08 up here. Now look at this wick that we've got on this quarter, right? That's, we're an inverted hammer. It's still green, so we're still above where we opened, but things have definitely neutralized from the quarter perspective, or started to neutralize from the quarter perspective, right? Again, we could break out of this 1 combo 2 down, combo 2 up if we go 2 down next quarter, and we're still not breaking down from the quarter perspective, because we could come all the way back down to the 724 or what was it, 723 from April before we'd create a lower low in the quarter. So this could just be the start of an uptrend, stair stepping back up. Nothing to be afraid of. Do want to continue to watch this 36.15 level. If we get back below there, you probably want to go ahead and exit those, especially like January, February, March calls for SOXL. You should be in profit if you had good entries. If you didn't have great entries, you should have been exiting anyway at even or whatever it was. But don't come out of that trade red after we had such a great push to the upside, right? Hopefully you got good entries. And even if we do go below that 36.15, the 1 2 down 2 up is not off the table. If we continue to, we could pull off what we call in the strat community as a Momo shooter, right? A Momo shooter is like an inverted hammer, or where the body could be even smaller, right? But it's still green, and in the sequence of an uptrend, and the next candle just continues to go 2 up, right? We just call it a Momo shooter, a momentum shooter, and that could be what we're doing here. Digesting this big move that we've made over the past few months. Pulling back a little bit, people collecting profits, but then people re-enter at specific levels, right? So if we get back down to this 35 level, you could see a lot of people start to re-enter here. I think. I probably would, especially once we get the signals that, we're starting to turn around at that level. I'd be looking for, January 28 contracts especially, but, June 27, even January 27, to kind of load up for that move back up to that 70 level. So again, kind of beating a dead horse. We're not breaking down from a long-term perspective. The year chart, we're still all right. We have this wick showing that we pulled back, but to come back from this 1 2 up 2 down with a higher low and a green hammerish candle, I'd say that's pretty successful from the year perspective. We're in a pretty good position to go from this 2 down to 2 up next year, triggering the 2 down 2 up with that magnitude of 70.08. All right, so that's where we stand on all time frames. Let's pull out let's just go to the 1 hour, go to our swing chart, and let's talk about the market maker's expected move. All right, so looking at last week, the market maker's expected move high was 53.69, and the low was 41.87. And you can see, if we look at last week's price action, we pretty much stayed in between that range. Yeah, we pushed down below it today, but you can see it push back up to that level. So you can see how, it's a pretty it's again, it's not an end all be all. It doesn't mean that price has to stop at those levels, but it's a pretty good judge of where price action is going to be. So that's the reason why we continue to chart it. The way that we are able to determine what that is, if we go to the options chain for SOXL and we look at the chain for November 14th, or the week of November 14th, we go over to the right. We can see in this, in the parentheses, we've got a 5.65 expected move, right? So $5.66 basically, we'll call it, right? So seeing how the close price on Friday was 41.74. Let's go to our notes, and we can see here for Monday, November 10th. Again, there's going to be 35 trading days left in the year on November 10th, Monday, November 10th. Close price on Friday was 41.74, and we can see that we have a market maker's expected move of plus or minus $5.66. When we take and add and subtract that from 41.74, that gives us a range of 47.40 to 37.08. So kind of opening up the door for more downside action, right, to that $36 level. But still a pretty wide range. So you could see some pretty good volatility next week, right? But with that in mind, 47.40, let's go ahead and put that on the board. I should have done this beforehand. All right, so we've got 47.40 as the market maker's expected move high there. Let's change the expected low, which again is 36.08. Oops. And move that on over. Okay. So we can see here, we've got last week's price action in this, I guess we call it a Fibonacci, where we've got the 0 level. This is the low of the week of November 7th. This is the 50% of the price action for the week of November 7th, and this was the high, 50.19, right? So Within that, the market makers expect that we should get towards the top end of last week's action, but not necessarily above it. If we go to the upside, if we go to the downside, then we should see the bottom of last week's price action and possibly even go below it, right? So that's why I'm saying we're opening up, the market makers are opening up the door for an expectation of a possible move lower next week. So another reason why you don't want to get too far ahead of your skis with the calls off of the lows today. But again, just market makers expected move high and low. Again, it's not the end all be all. It doesn't mean once price hits here it has to reject or go sideways. It could poke above, but 70% of the time price stays within those levels, right? So that's the market makers expected move for the week. Let's go ahead and dive into the 4-hour markers and triggers and targets for Monday. Let's go to the scalp chart and let's make sure we get everything on the board here. I did not move open overnight high and overnight low, so let's get that. Let's just move this here as an example. We'll say it gets there, and we'll say this goes here. All right, so currently we have on the chart previous high of day up here at the top at 41.74. Overnight high, we don't know what it'll be by the time we open Monday, but let's say it's just somewhere around here within the previous day's range, and then same with the low, somewhere within the previous day's range, and then we got the previous low day down here at 37.04. All right, those are our 4-hour markers. The only one left that we would have to put out there is opening print. So say we push down through the weekend back into Friday's price action, do some bouncing around, and we go ahead and open price somewhere between the overnight high and the overnight low, right? That's kind of ideal when you look at it from a scalper's perspective. And we wanted, again, just refer to the proven and repeatable strategy that we go through, right? Very simple rules. If we get calls, if price action goes above opening print and we get higher lows at or above opening print, we want to get into calls. If we get lower highs at or below opening print, we want to get into puts. So if we open here and we push up, say we reject off an overnight high and we push back down, but we get a higher low, we want to enter calls, and the first target is going to be that overnight high. Second target would be your previous high a day. On the flip side, if we open and we push down, say we bounce off an overnight low and we come back up, but then we reject at or below opening print, we want to get into puts. First target would be overnight low. Second target would be previous low a day. Now price goes beyond previous high a day, previous low a day, or overnight high, overnight low. Then we turn to our 4-hour markers and our, not our 4-hour markers, but the 4-hour time frame and the triggers and targets that we set out there, right? So looking at the 4-hour time frame, we can see that, again, we triggered, at the end of the day, we triggered this 1, 2 down, 2 up. Now the magnitude for that is the high of the candle to the left of the 1. So if we would have ran the full strat, we would have come back up to, 46.99, right? The high of Thursday. But, we had a pretty long ways to come back from that. So it only triggered. Now, if we do get more price action to the upside on Monday, that will, re-trigger the strat basically with the 1, 2 down combo 2 up, right? Just two candles combining to make the 2 up of the 1, 2 up, 2 down reversal. So that would trigger at 41.74. We'd have the gap close to give us a little bit more fuel to hopefully break through this last week's 50% line. But we do have last month's 50%, the green dash line, and last week's 50% line, which is the purple dash line. Those are both going to act as resistance, right? Those are our points of inflection, right? They're the middle of a specific range, be it the month time frame or the week time frame. So it doesn't mean we're going to reject here, but it does mean we could see rejection. We could see sideways action as well, right? But just expect to see a little bit of a fight over these two levels, if not the whole range from 42 to 43, 42.30 to 42.60, right? Once you get to that 43.60, you can see how that last week's 50% aligns with this 100% fib extension of the bull flag, right? From April 7 low to July highs. So, expect some resistance here. Now, if we get through that resistance, look at this, pretty big candle. was basically a gap at one point. So you should see some pretty good action back up to last year's 50% line, which is this 46.79. And you can see just in the last few weeks how that has acted as either support and resistance. So another point of inflection, and it also lines up with this daily downtrend line. So expect to see a fight over 46.79. That also happens to be the market maker's expected move high. So you can see how all of these tie in and could act as resistance on our way back up, but the reversal strat has triggered, so we've got to look for more upside. Now, if over the weekend, we get a push back down and on Monday we open up and in the first 4-hour candle we push below the low of the second 4-hour candle from Friday, that triggers a 2 up, 2 down, right? That triggers at, 38.63 down here. And the magnitude would basically be last week's low, or the low of Friday, right? Now, if we do go back down, that locks in another lower high, and that could fuel more momentum for a push further down, right? Now, we do have the market maker's expected move low down here, along with last quarter's high, 35.49, and the quarter flip, right? So those should act as some support. There's also last month's low. So, being the bottom of that range, we should see some support there, right? So, not calling for it to push down further, but I can definitely see how that would happen. But at the same time, if it does happen, be cautious about loading up too much. There may not be too much further to go to the downside, right? Now, that's for the 4-hour chart, more of a day trade, full day long day trade, maybe even overnight swing trade. But if we look at the day chart, we can see we've got a lower low, right? It is a green hammer, but it's a lower low after a lower high. So we're still in this downtrend. And, if we do happen to get that move to the upside, again, there's a lot of stuff to fight through. Even when we get past last year's 50%, if we get past market makers expected move high, we've still got the month flip, right? That could, we're still red on the month. So that could act as resistance, which also lines up with last week's high and last month's high. So we've got a lot of work to do to get back to the upside. If we're going to poke above this range, we're dealing with this daily broadening formation, this orange diagonal line. Then we've got this weekly broadening formation up here, this purple diagonal line. So, expect to see some more chop, if not pullback next week. That's what I'm expecting, right? I'm not saying we're going to pull back for sure, but the door is definitely open, and there's still room for it, right? So from the day chart, if we do get priced to the upside, that triggers the day 2 down, 2 up. Again, magnitude basically last year's 50% level, market makers expected move high. If we get price action to the downside, we're looking at a 2 down, 2 down continuation. At the same time as we have resistance above, we've got quite a bit of support below. So that's why I say we could see some chop next week, just sideways action. And that shouldn't be scary, right? If we look back at the flag portion of the bull flag from the April low, here's the July high. From mid-June to mid-August, we just went sideways. I think it was like 11 or 12 weeks of sideways action between 24 and 28. So if we do get another range, not a big deal, right? We just need to wait for things to resolve themselves, and while it is in the range, play the range, right? Buy calls at the bottom, buy puts at the top, or sell calls at the top. Just play the range, right? Don't be scared of it, right? So that's it kind of from the short-term perspective. Let's flip over to the notes real quick so we can just look at the hard numbers. We talked about the scalping perspective, higher lows at or above opening print. We're looking for calls, targeting overnight high and previous high a day. If we get lower highs at or below opening print, we're getting into puts, looking for overnight low and previous low a day, right? Very simple. Now, you can layer some nuance in there if we are at some, major levels, but if we're at a major level but still below opening print and you think that we're going to bounce because of certain things, take a little bit of risk. Don't get as big a position as you normally would, but add a little bit of nuance there, put a little bit more risk on the table, and you could see the benefit there. But for at least for a proven and repeatable strategy, stick to the core rules and you should be fine. From the 4-hour chart, again, if we get price action to the downside, that's a 2 up, 2 down reversal, triggering at 38.63 with a magnitude of 37.04. And we've got an extended target here of 35.97. which was the magnitude for the 2 up, 2 down on the week that triggered this past week. All right, so that would complete that. Now, if we get price action to the upside, that's a 1 2 down combo 2 up, triggering at 41.74. The magnitude is 46.99, and we've got quite a bit of resistance to go through. So not just the distance that we have to go, but the resistance we have to go through. I went ahead and put some intermediate targets out there in case we set those lower highs on the 1 or 4 hour time chart. So we've got 43.62 and 44.70 as intermediate targets, but the ultimate magnitude for that move to the upside would be 46.99. On the day chart, we would trigger a 2 down continuation at 37.04. Again, that target would be 35.97 for that move, and then we've got extended targets of 34.17 and 33.18. Now, if we get a price action to the upside and trigger a 2 down, 2 up on Monday, we're looking at triggering that at 41.74 with a target of, again, 43.62 and 44.70 on the way to the magnitude of the move, which is 46.99. All right. We talked about the week. We won't go back to the charts for the rest of these. We'll just talk about the numbers here. We talked about on the week, we triggered the 2 up, 2 down this week and did not quite reach magnitude. So if we continued to move down, that would trigger the 2 up combo 2 down at 41.74, giving us a magnitude of 35.97. If we get to that 35.97 and continue to push down, that triggers a combo 2 up, combo 2 down with a magnitude of 34.17. And actually, because we just have continuous 2 ups, 2 ups, 2 ups for the past, 7 or 8 weeks, it's just more combo 2 ups, combo 2 downs with the magnitudes being the lows of those candles. So we've got extended targets for the week of 34.17, 33.18, and 31.28. Right now, if we go back to the upside, got quite a ways to go to trigger that, but that would trigger a 2 down, 2 up at 50.19. The target for that, or the magnitude, I'm sorry, this is a magnitude, and these are targets, right? So to the upside, triggering 2 down, 2 up at 50.19. Magnitude not so big, with at being 51.91, but we do have some extended targets out here: 53.15, 54.42, 55.46, and 56.92 if we really get to running. Again, people could be looking at this week as just a pullback opportunity and could just pile back in. We don't know what news is out there. We've got AMD earnings coming up. We got NVIDIA earnings coming up. So, we could get that push back up to the upside again. That's why I wanted to put those extended targets out there. At the same time, again, we're not getting ahead of ourselves. We've still got our triggers and targets to the downside. On the month, we're still an inside candle on the month, so we haven't triggered a 2 up or 2 down yet. If we do continue to push down and trigger the 2 up, 2 down on the month, that triggers at 33.98, has a target of 28.93, and a full magnitude of 23.80. All right. Now, if we continue back to the upside and push 2 up, we're just looking at a 2 up, 2 up continuation, triggering at 50.76. And we've got targets of 54.42, 56.92, 59.30, and so on, as we continue to move up to that ultimate target of 70.08, which is the magnitude of this 1 combo 2 down, combo 2 up on the quarter, that triggered at 36.15, right? And we've reached a couple of targets, but we went ahead and listed out a bunch of these other intermediate targets because that move all the way up to 70.08 is quite a move. So we want to have those on board, right? But again, as long as we're above that 36.15, we're looking good. Even if we go below that 36.15, it's not the end of the world. We've got a ton of room to make a higher low. And again, I'm talking about higher lows. Looking at the year, we triggered the 1 2 up 2 down, but we did not reach magnitude, and we made a higher low so far. Got to close the year out, but we've made a higher low, got that green hammer going. So don't think we're going to see that 70.08 to trigger the green 3 or the bullish engulfer, but we do have it out there in case we do hit a run, and we've got an extended target. But again, that would be a huge move for the year. Basically a 10x, not basically, it would be basically a 10x move from that 724 low in April. So there you have it. Those are the triggers and targets from a scalping perspective all the way through the year chart. Hope everybody has enjoyed this video. Again, we just try and cram in as much information as we can without taking up too much of your time. So giving us a thumbs up goes a long way. It's free. This channel's free. We're not trying to sell anything. So we'd appreciate the thumbs up, and maybe share the link with a friend or colleague or someone else who is interested in investing, because these triggers and targets in the method of trading, it's not just for day trading, scalping, and buying leap options, and you can implement this with shares, right? If you follow the rules of the strat, if you watch your points of resistance and support, and use these triggers and targets, you can implement a very good investment strategy as well. I mean, that's what we do over here. So anyways, it's the end of this video. Depending on when you're watching this, throughout the weekend or on Monday, hope you're having a good weekend. Hope you had a good weekend. Like we normally say, if you're joining us on Monday and didn't catch us on the weekend, we hope you got some good sleep and are refreshed and ready for another great week of trading. And we look forward to seeing you out there.